Crypto is pumping, but who's actually buying? Bitcoin just exploded from around $65,000 to nearly $80,000. And if you're looking at that green candle thinking, did I miss it? Is this the start of a real rally? Or am I about to buy the top? You need to understand what actually happened, because this rally was not driven by one group. There was real ETF buying, there was a major macro catalyst, and there was more than $4 billion in forced buying from short sellers getting liquidated. So the question is not, why is Bitcoin going up? The better question is, who actually pushed it up? Because once you know who is buying, why they're buying, and whether they'll keep buying, you have a much better way to tell the difference between a real rally and a temporary squeeze.
But why is Bitcoin pumping? Three forces hit Bitcoin at almost the same time. First, the U.S. Treasury announced larger long-term bond buybacks that pushed Treasury yields and the dollar lower. Second, money started flowing back into spot Bitcoin ETFs. Around $1.6 billion entered during the week, including more than $600 million in a single day. And third, short sellers got trapped. As Bitcoin moved higher, traders betting against it were forced to close their positions. That triggered more than $4.3 billion in crypto short liquidations. So Bitcoin had two very different types of buyers, people who wanted to buy and people who were forced to buy. That distinction is where most retail traders get confused. You see Bitcoin pumping. One person says institutions are buying. Another says it's just a short squeeze. The answer is both happened. But now comes the problem. When a short seller is forced to buy, that buying doesn't last forever. So what happens when those buyers disappear?
What happens when the short squeeze ends? A short squeeze can push the price up very quickly, but eventually those short positions get closed. And once they're closed, those traders are no longer buyers. So after the forced buying slows down, the market needs someone else to keep the move alive. This is where retail often gets trapped. They see price up and immediately assume demand will continue. But that's not the right question. The real question is, who replaces the buyers that just disappeared? If you're wondering, am I buying a real breakout or chasing a temporary pump? Watch what happens after the liquidation wave slows down. Are ETF buyers still coming in? Are people actually buying Bitcoin on the spot market? Are dips getting bought? And most importantly, can Bitcoin hold its gains without another massive wave of forced buying? Because that takes us to the next question. Who actually chose to buy Bitcoin?
Are ETF buyers really driving this rally? Yes. Spot Bitcoin ETFs recorded around $1.6 billion in net inflows from Monday through Thursday. Thursday alone brought in more than $600 million. That matters because ETF buyers are different from liquidated short sellers. A short seller buys because they have to. An ETF investor buys because they choose to allocate money to Bitcoin. But here's the part retail should not ignore. ETF inflows were only one part of the rally. The same move was also amplified by billions of dollars in short liquidations and a major macro shift. So don't reduce the story to institutions bought, therefore buy now. The better question is, will ETF demand continue after the excitement fades? Because a single week of inflows can start a move, but sustained inflows can help support one. So that's what matters next, not the headline, the continuation. And that's where the story gets more interesting, because Bitcoin is only half the story. Bitcoin had ETF buying, Bitcoin had a short squeeze. But another major crypto asset showed a completely different pattern, and it may tell us even more about who was positioning before the market moved.
While Bitcoin was squeezing higher, what were XRP whales doing? While Bitcoin's move was loud and fast, XRP was showing something much quieter. XRP had been under pressure. It fell to around the psychological $1 level. For retail, that looked like weakness. But large XRP holders were doing the opposite. They were accumulating. Reports tracking large wallets showed that whales added more than 380 million XRP in a single week. At the same time, the number of wallets holding at least 1 million XRP increased by 32 over 3 months. That matters because XRP's price had been falling, while some of its largest holders were increasing their exposure. So the chart was saying one thing, large wallet behavior was saying another. Then the market moved. Recent XRP trading pushed sharply above the $1 area, with the latest breakout reports describing moves into roughly the $1.37 range and higher during the broader rally. That does not prove that whales bought exactly at $1. and it does not prove how much profit they made, but the sequence matters. Weak price, heavy accumulation, then a sharp move higher. And that's the part worth understanding, because now the obvious question is, 380 million tokens, more large wallets, and then a sharp move. So how did they know?
How did the whales see it before the price moved? The simple answer is, they may not have known. They may simply have been willing to take a position when everyone else was focused on the falling price. And this is the real lesson. The data was public. Large wallet balances were visible. XRP withdrawals were being tracked. Whale activity was increasing. Most retail traders were watching one thing: the price. Large holders were positioning based on something else. That doesn't mean copy every whale. It means don't let the chart be your only source of information. When price is weak, but positioning is changing, that's when you should start asking questions, not blindly buying, investigating. And now we get to the biggest question. If Bitcoin had ETF buyers and short liquidations, and XRP had large holders accumulating during weakness, where was retail?
Is retail actually buying this rally? This is where we need to be careful. The answer is not, retail isn't buying anything. That would be impossible to prove. But look at what we can clearly measure. During this move, the strongest visible forces were ETF inflows, macro positioning, short liquidations, and large holder accumulation in assets such as XRP. That does not look like the classic story where millions of retail traders suddenly wake up and push everything higher at once. Instead, the market started moving before there was clear evidence of broad retail euphoria. And that matters, because retail often enters after the first major move. The first buyers take the risk, the market starts moving, the headlines arrive, then the average trader finally notices. So if you're thinking, am I already late? Don't try to guess. Watch for evidence that the next group of buyers is actually arriving. Look for stronger public interest, rising spot activity, broader altcoin participation, and eventually widespread FOMO. When several of those start appearing together, the market may be entering a different phase.
Want to stay ahead of these daily shifts? Join my free Telegram channel for daily crypto market updates. I'll share the important changes, market signals, and developments that are worth watching, so you don't have to rely only on headlines or chase every move after it happens. The link is in the description. If this analysis is adding value, please like, share, and subscribe. Now, before you buy anything, there is a much simpler way to think about all of this.
The simple reality check before you buy. Before buying into any crypto rally, ask 3 questions. First, who is buying? Is it ETF investors, institutions, large holders, retail, or traders being forced to close losing positions? Second, why are they buying? Do they want long-term exposure? Did macro conditions change? Are they speculating? Or are they being forced to buy because their position got liquidated? And third, will they still be buying tomorrow? That is the question most people forget. A temporary buyer can create a huge green candle, but temporary buying eventually stops. So the next time Bitcoin or any other crypto suddenly explodes higher, don't immediately ask, how high can this go? Ask, where is the next buyer coming from? The final reality check. This rally was real, but the buyers behind it were not all the same. Bitcoin had a macro catalyst. It had strong ETF inflows, and it had billions of dollars in forced buying from liquidated shorts. XRP showed a different pattern. Its price weakened around the $1 area, while large holders accumulated hundreds of millions of tokens. Then the market turned higher. 2 different assets, 2 different mechanisms. One important lesson: a green candle does not tell you why someone bought. It only tells you that someone did. So before you chase the next rally, ask, who is buying, why are they buying, and will they still be buying tomorrow? Because once you start asking those questions, you stop treating every crypto pump as the same story. Don't just follow the green candle, find out who's behind it.